Taking a look here at the broader markets. So what I do have pulled up on the right side of my screen, I have the triple Qs, the NASDAQ 100 ETF. Um, that's going to be the daily chart. On the left side of my screen, what I'm going to have is kind of like the chart I'm using to monitor my day trades. That's going to be the 1 hour time frame. Um, I'm more of a day trader. Actually, it's like, so it's very, very hard. Everyone has their own particular strategy. So sometimes I'm actually only in trades anywhere from 3 minutes, 5 minutes, but sometimes I'm in trades 1 hour, 2 hours, 3 hours. It's just depending on the momentum. So, the big misconception in scalping or day trading is that you have to follow the 1 minute time frame. You need to follow the 2 minute time frame. Although those time frames are good for kind of managing and monitoring your trade while you're in it, I kind of like to scalp the bigger time frames, and as they confirm on the bigger time frames, I like to get in on that confirmation and kind of scalp that move as it's riding. Just due to the fact that if you've ever played the 1 minute between, if you've ever played between the 1 minute and the 15, you got one candle going up and then down and then down and then down. It looks like, the chart's ready to fall off a cliff. And then, you really zoom out and look at maybe the 30-minute or look at the hourly or look at the 4 hour, and the chart is, well above, demand. It's well, or it's coming into supply, and it's like, hey, you should have sold, but because you're following each and every small tick on the 1, 2, 5 minute time frames, you kind of just miss the overall big picture. So it just takes a lot more stress off of you as a trader when you can kind of just sit back, mark out some key levels, kind of look at it from a macro picture. And as these charts start to confirm these higher time frames, whether that be the daily time frames or whether that be the hourly time frames, even the 4 hour time frame is good. You can kind of really take advantage of those moves as those candlesticks are confirming that price action on a larger time frame. I hope that kind of helps. Versus like, if we're really sitting back and let's say we're watching the 5 minute time frame, and it's kind of pitter pattering up and then it pitter patters down, and then it sets up a pattern for you. Let's say you're watching some kind of bull flag, big nice pop candles with some sideways consolidation. Well, that move can maybe only be 50 cents, 30 cents, quickly retrace back down, come back into some support. Now you're up in the trade, then you're down in the trade. And it's kind of all over the place. So why I really like following this 1 hour time frame, if we can just take the triple Qs here, we kind of did put in that base. We put in that base at around 369 today. Very, very aggressive sell off at the start of the open. We can kind of see how we came down here and lost the 150-day moving average, put in this base at 369, and then, just kind of screamed higher for the last 3 hours of the market. But with that being said, so we got 3 hours worth of rally here. We did come back, test the 20-period moving average on the 1 hour time frame once. This is a great dip opportunity. So you could have essentially, bounced this off the 20 on the hourly time frame, came all the way back up in the after hours, and then we kind of just consolidated in the rest of the after hours session. So if we really look at this chart here, if we can confirm this 381.13, what we put in the after hours session, if we can confirm this heading into tomorrow pre-market or right off the bell, wait for a little bit of confirmation. Maybe we even get a pullback back to the 20 at 377. As soon as we reconfirm this 381.13 is your buy signal to get long. If we kind of take a look at the daily time frame and kind of see where that's putting us at, that 381.13 is putting us right here at this orange and yellow line on my screen, and that's going to be the 100 EMA and the 100 SMA. So we're going to have a little bit of choppiness here. I would expect maybe we get this initial breakout, so it might look something like this on the hourly time frame. We might get this initial breakout, we might come back down and back test, we might quickly lose this level, and then we might start to reclaim, and then we might start to move up a little bit more. And if we can kind of clear out on the daily time frame, if we can kind of clear out that 100 SMA and EMA, then we know that this support down here is acted as validation. This sideways consolidation is going to hold up. We're going to give our 20-period moving average enough time to start creeping up. I'll feel confident taking this play. We're going to use the 20-period moving average as our absolute stop on a 1 hour time frame, and then we can kind of scream higher. We have the 200 SMA at 392 on the 1 hour time frame. So intraday, we have a lot of room to run. Obviously, we're going to run into a little bit of supply on the daily time frame. So some of your bigger macro levels, what I would be looking for tomorrow on if we have any kind of continued day two dead cat bounce will be a price target 384, 385 on the triple Qs. The triple Qs are going to put in a little bit of a green day, whether that be at the start of the session, midway, or at the close. I would kind of look to, scale out your profits before 384, 385, depending on the stocks that you're trading, or if you're trading the actual ETF itself. That way, in case we do get rejected at that 5-day moving average on the daily time frame, we know we can kind of pull out of that trade. And as to why we're running into that rejection, and we'll be running into that rejection just due to the fact that we have that daily 5-day moving average there. So kind of just going over what the Qs did, why did we stop where we stopped? If you kind of look where we kind of rested before we had this big mega run up, it's right here at the 150-day moving average. So after the bulls lost this level, this is all the power in the world for the bears to remain in control. Now, don't get me wrong. Bears are still in control of the overall triple Qs, just due to the fact that we are trading below the 50-day moving average. The 50-day moving average is sitting at a price right now at about 395.51. Until the triple Qs can reclaim 395.51 or 393.51, that's when we can start to say, hey, maybe the short-term bottom is in. Not to say that we can't correct further down at a later date, but maybe the short-term bottom is in and we're over the 50-day moving average. Now we're going to start to pull some of these stocks up that really got hit pretty aggressively. If we're going to look for any more kind of day two continued selling after today's open, the bears would have really wanted to close, at least under this 374. I'm not saying we had to close at the lows of 369, but a nice close under 374 would really put the bears in control. I could see any kind of green open, gap open, or any kind of, rally off the bell would come up, get stuffed into supply, and then kind of, start to trickle over and then come through this 369 again, which would take us potentially to this 369, this whole rising 200-day moving average. My personal opinion, I still think that we come down here at some point and test this 200-day moving average. It just depends on when. Over time, obviously, this line is going to slowly start to trickle up. So, could we remain over 369 long enough for the 200-day moving average to kind of catch up, and this now becomes our new support? Possible. Or could we put in a day two, a little bit of a bounce, come up to the 5-day moving average, maybe come up to 387 here before we get rejected and come back down again? Also very true. So what we need to just kind of focus on each and every single day until we're back up over the 50-day moving average, until we're trending in the right direction, is kind of just treat every trade as a scalp. Treat every trade as a day trade. Right now is definitely not the time, long or short, to go and start just throwing on a bunch of swing trades. It's not time right now to start loading the boat and telling yourself you're buying this dip because we're going higher. Could we go higher and never come back down and test these levels? 100%. Could you load the boat right now, buy a bunch of positions, get a little bit of a rally, a relief rally, a dead cat bounce, 3 days, a week, 2 weeks, and then we're having this conversation 2-3 weeks down the road after we flush through 369, and now we're sitting down here at 360, 363 at the 200-day moving average? That's also entirely true. So for me, in my game plan right now, what I'm really trying to focus on, stay cash. That way I have money, I have liquidity available to, participate long or short, depending on what the market is giving us. And, just kind of treat every trade as a scalp. If it happens to turn into an all-day runner, that's always a good thing. But if I get in and I'm able to make a couple points on a move, take that cash flow, I'm more than happy with that move. So just kind of wanted to give you guys a little bit of an idea of what I was looking at on the triple Qs. I think if you kind of look around tech, look at Tesla, look at Microsoft, look at Apple, look at AMD, look at Nvidia, a lot of stocks in tech, look at the triple Qs, the ETF itself. A lot of stocks put in this nice hammer candle today. Okay. So normally when we get these hammer candles, it's kind of indicating to us that there's going to be a change in momentum for the short term. Now that doesn't mean that we're coming all the way back up here, guys, and we're going to make all-time highs. That's not what it means. What it means is we could potentially get a 1, 2, 3-day rally. Okay. What that means is maybe we can get a big rally tomorrow and then we come back down to back test, or maybe we get, a little bit of a pullback tomorrow and then we get a little bit of a rally after CPI data numbers on Wednesday and then into Thursday. Or we can completely just kind of come right over the 381 level and then kind of just chop around sideways. Okay. But what I'm trying to say is normally this type of candle is indicating to us that we're not going to really see more follow through in the short term. And now short term can be 1 hour, short term can be for 3 weeks. We don't know until the price action tells us. So, it kind of gets frustrating when people try to start guessing the market and what the market is going to do. Hey, because we put in this candle and we tested the 150 or the 100-day moving average here, that now we're going all the way back up to all-time highs. That's not really the way it works. We're not here to guess. What we're here to do is let the market do its thing, and then we just need to react to that price action. So if we get that bounce, then we get rejected here, then maybe we can fade it a little bit back through if we lose this 381. And we know we have a measured potential of this 369, okay? But if we kind of come up here and then back test 381 and hold, now we know that potentially this is going to act as a little bit of a mini support short term. And now we can get long for a continued bounce to the north side. So with that being said, guys, if you want more information, you guys want one-on-one coaching, you guys want to learn how I trade, you want to learn how I scalp, you want to learn how I make money trading options, join my Discord, completely free. I also do have a paid section in there where I kind of dish out my watch list, my personal watch list, kind of give you guys my thoughts and feedback intraday, as these trades are playing out, so you can kind of, get the feel of what's going on. I'm also available to answer any questions that you guys have. You want to bounce around some ideas. It's always great to kind of bounce your ideas off of another trader because, let's be real honest. Trading can get very, very, you're secluded a lot of the times when you're trading. It's just you looking at the charts. When you kind of, get inside your thoughts and you get inside your head and you get inside your ego and you kind of let, your thoughts in your mind run away from you, you can make some big mistakes when it comes to trading, especially when, we're laying out real money on the line here. So with that being said, guys, subscribe to my channel, leave me a comment, drop me that thumbs up, and I will see you guys all in the next video.